Chief Financial Officer's report.
Okay. I would like to highlight the June 2018 financials. This was the last month of our current fiscal year, so that represents 100% of it. If we look at Board Book page 8, we'll go over the June monthly financial report. Total monthly revenue for all funds was roughly $620,000. Operating revenue for the month was $563,000. Our big revenue sources that came in were general state aid payment, special ed transportation payment, and federal special ed private placement. On the expenditure side, we had roughly $3.1 million in expenditures. The operating expenditures for the month were $1.1 million. Out of our expenditures, our salary and benefits was $1.45 million. We had a bond and interest payment in June for $1 million, and our out-of-district tuition was $127,970. If we look at the operating fund balances at the end of the year, you'll see that we had 15.7, and if we take out the 3,000 that's restricted by the board, that leaves us with 12.7 million in operating fund balance.
Which is roughly about 50%, 49%?
Pretty close to that, yes. If we move to the financial statements that start on page 9, the first page will go through what the beginning fund balances were for all funds, plus the revenue, minus our expenditures. You'll see our operating funds had a surplus of $3.636 million. Just a reminder that we did receive a $3 million working cash bond. So if you exclude the $3 million working cash bond out of there, the surplus for the year was $636,958. If we moved,
We had budgeted what last year?
it was budgeted at a deficit around $300,000.
Okay, so that's a $900,000 swing.
Yes.
What accounts for that 900, Scott?
Out of the 900, the additional tax revenue that we received after June 30th that hit in July, there was also an increase in general state aid that we did receive, and the state made 5 payments this year. Normally they make 4. So we received 2 payments from the remaining payments from FY17 and then got 3 payments in FY18.
So how much of the last year's state payments, do you know how much roughly that was that we had budgeted last year that came in this year that was not budgeted?
I'd have to go through
Roughly?
and track it.
Okay.
I'm not really 100%.
The taxes were roughly 600, correct?
Yes.
And then the reimbursement was a little over 110.
Yeah,
Roughly.
maybe 110, maybe a little higher than that.
Okay,
And
so
then
that's already
general state aid
700,000.
was probably another 100.
Okay, and that's the new formula, so there
The
was
new
no
formula.
historical to go off of that.
Mm-hmm.
So the biggest chunk is the 600 in the tax.
In the tax
taxes.
collection.
All right.
All right, so I got a suggestion for that when we get to the budget part.
Okay. As we move to the revenue, you'll see in our operating funds, everything came in over budget on it, which is a good thing. I know we underestimated some of the revenue at the
Yeah.
start of the year.
Let's be careful how we say that's a good thing. In a perfect world, we want them to match, right?
I
It's
understand, but
impossible,
it is impossible to get truly and capture it within 1 or 2% of
Okay.
what you budget.
Okay.
It's obviously better still to get more revenue than not get the revenue, so you're.
Right.
But as you can see, everything kind of falls in place with anywhere from 101% over to 6% over.
The big one was the 112%.
That was transportation. That one was pretty good. We did receive that last payment. That one was quite significant for special education reimbursement from the state. So that did put us up a little bit higher to get to the 12%. But the big one is the ed fund, because that's our largest fund.
Okay.
On the expenditure side, if we look at our operating funds, everything was pretty much right at budget. We had one was higher, was IMRF, FICA. But the other, the two big main ones is our operations and maintenance and our education fund. And education came right at budget, and our operations and maintenance was just slightly under. The overall operating funds were under by 62,000, pretty close to what was budgeted. That I think is, a pretty good capture of what our actual expenditures were versus budget versus actual.
So if we add the 62,000 to the 937,000 that the revenue came above what we budgeted, it's almost exactly $1 million,
Mhm.
right?
Do you have any questions submitted on the financial report?
Nothing on that portion of it. If we move on, the student activity accounts are in there. There was a question submitted at the last board meeting to track a 3-year history of the testing activity account. That is in your board book, just showing you what expenditures and what revenue was collected in that particular account. There has been some years where certain items were not charged to that account. So I know there was some significant concern that account was sitting at over $100,000. It is currently at $60,730. With everything now in place, we'll be spending down that money to getting it more closely to just slightly over in the positive, but spending that down.
Before you go on, unless you're going to answer, we talk about the budget for for Fund 10 on page 12. For the current levy, we're $253,000 under budget. Do we expect to recover that $253,000 in the next couple of months?
I talked with our district auditor on that,
Yeah.
and what to do
Well, the
with.
district auditor doesn't know if we're going to collect funds in the next 2 months.
I understand. I'm
does
just trying to get a better perspective on that money, because there was a question about, do we carry that over, do we not carry it over? That was submitted. Per the auditor and per the way to budget on a cash basis, you can't expect to get that. You just have to budget moving forward on a cash basis.
Okay, well, that doesn't answer my question. If we budget on forward on a cash basis, do we expect to get the $252,000 in the first couple of months of 2019?
I do not know that. I do not know when Cook County is going to release
But
taxes.
are you expecting it to get into this current school year? Even though it was budgeted last year, is it going to come
I'm
in?
hoping to capture all those dollars.
They're
from
going
the
to come
tax
in this
revenue.
year. You hope. You don't know.
I don't know, but I'm.
But you're hoping.
yeah,
We're
you're-
based on historical, we probably will collect it.
Probably.
So we don't have it in the proposed budget that we're going to vote on to put out to the public, but we're going to know before we approve the budget if we collect the $252,000 for the final budget for 2019, right?
If we receive it.
If we receive it and what tax year it is. Because it'll come back to me from the county telling me what tax year it was. So I'll have to see if it was 2017 taxes that come in. Because there is a potential that 16 taxes could be coming in.
16?
Yes.
Well, we
So-
talked about that before,
Mhm.
that whether we should record it based on the year it's coming in.
And we do.
No, we don't.
We do per what's in there.
It's just
Current
we
year
just-
will be, current year, it shouldn't be current year anymore. Current year will be 2018 taxes that are coming in our new budget. The prior year taxes are anything prior to that. So it'll be 17, 16, 15. We do collect payment in multiple tax years that all hit under prior year
So
tax levies.
I think the biggest thing, Scott,
Hold on a
is
second, before, in the budget, when you ask us to approve the budget day, you're going to have 2 line items for each of the funds, prior and current.
Mhm.
The prior is the first collection during that fiscal year, right?
Yes,
So we're saying it's prior because it's
because it's
last
not
year's assessed.
2018. That's how it works. Our current year will be our 2018 levy, which will be the first installment, which will be in March of 2019. That's what current year will be.
And then the prior is going to be
It'll be
any
this,
assessment
anything
that was
from
made.
now until
hold on a second, you gotta go back, not forward, because the second assessment for 2017 is gonna be paid starting
August
in
here.
August of 2018, right?
Mm-hmm.
So that's gonna be the prior,
Yes,
and any collections we have for prior periods that
Yes.
come in, right? So when you did the budget for the prior, you did it based on what we assessed to collect for the next two assessments, right?
yes,
But we're going to get we expect to collect the $252,000, right?
that's what I'm expecting.
But we're not adding it into the budget right now.
No, I
At
do
this
not
point,
have,
we do
I
not.
do not have it in there. I'm basing it off of the extension that I'm believing is their 2017, plus I'm also estimating then our 18 levy.
I think what Tim's saying though is last year in September when we talked about this, and so if we received something from the treasurer like we did last year, we should, before the board takes formal action approving the budget in September, we should include those dollars in the prior year number. And that's something, we debated this as a board in a public meeting last September, I believe it was. And we still, I don't know if we ever reached a final decision as a majority of the board, but I think that's what Tim's saying. Even though he understands the prior year is the the second collection of last year's levy, or the previous year's levy. If we get that 250 before September, we should account it, since it's it's a cash basis budget, and list it so so let's say right now we have a $200,000 deficit. If we receive that $200,000 and it's all from stuff from 16, 15, 14, whatever it is, we should account that. Even though the auditor is going to accrue it, we should account it in the cash side of the prior year line item.
Let me make sure I understand this again. So in the budget, it shows the 2018 assessment, right?
Yeah, that would be our
Of which
current.
one of them is going to be collected beginning in March of 2019.
19.
And one in August, right?
Mm-hmm.
So when I look at the prior for your budget for this Fund 10, it's going to be the proportional share, not of what the levy is. It's going to be the second payment for 2017 that we're going to collect starting in August, and the first payment for 2018, right?
That is correct.
And that's how we picked them up, right?
Mm-hmm.
But the second one, or the prior, will also include, what we'll actually collect is any carryover
Yes.
from any prior years, which, before we finish.
In theory, yes.
Why isn't it in theory? Don't every year, I mean, I asked you, we're 252,000 below for the current one.
But remember too, though, that 252,000, that was a estimate
Yeah,
from the previous year.
right.
So you're basing it off of that budget number was absolutely correct. And there could be some margin of error in that
Well, of
budget number.
course.
Because it's
It's not
not
gonna
an
be
exact
exactly.
number with it, because you're
Well, let me put
trying to
this-
capture, there's things that are out there that can happen with, for example, capturing new EAV that could come on, which then the district is entitled to, and that may increase our
You don't
levy
have
mark.
You don't have to explain to me that no budget number is going to come in exactly. It's rare that any line will come in exactly. But because that's what we estimated, we think it's going to be in the ballpark of the 252, right?
It should, yeah.
Okay, so if it's in the ballpark of the 252, we expect to collect that. Then there might be part of the second one that we don't get, or the first part of the assessment, the levy for 2018, we're collecting in 2019, we may not get, but because that's 55%, and the other one is 45, it tends to give us, if we collect this and there's not a drop down at the end where we don't collect it, we're gonna be 252 more, our deficit will be 252,000 less just for that one line item, right?
I would rather not budget it. I would rather that we can always explain it as a variance, because we don't know. Right now, the last couple of years, our collection rates have gone up from 98% collection rate to 99.5%. We don't know if we'll collect this 250 or not. So
But we'll know before we approve the final budget.
I understand that, but I'd rather that we come through and budget as the way we've been consistently budgeting, what I would suggest is that we show, you know, that if we do get to 250 or we get 200 or we get 100 of it, we can always show that we budgeted a deficit of X plus revenues that we budgeted last year minus revenues we didn't get in. Because what are we going to do? We're going to budget now 250 out of the current year?
And what if it doesn't come in?
Anticipating that we're not going to get, you know, I understand you're saying because we know what we know. I think we have to go with a budget.
Well, then let me ask a different
Because we have expenses on the other side too that we're basing on what we say our levy's going to be on.
Well, I'd ask if the other, I don't necessarily, Gary and I usually agree on things. I don't agree with him on this. We have every year since maybe the first or second year, when the year's up, we have a tremendous amount more surplus than we estimated. We had $1 million this year, and we only have a 20-some million dollar budget. It's 5%. I suggest we look back before we approve the final budget on the last 5 years and show us what did we estimate as a deficit.
I think a lot of it was due to that we always budget a certain amount of refunds in there. I know in the early years we were budgeting almost 700,000 of refunds.
Well, let me make my suggestion, and people can agree or not agree. But I think we should look and say, what did we start for our budget, initial budget, what did we say our surplus or deficit would be? And at the end of the year, what did we come in of revenues above and below, just the total for the operating, expenses above and below, and how did our overall, like we did this one, come up? Like we did this one, we were 630 above on revenues, we were 762,000 ahead on expenditures, and we came in 700,000 surplus, and we estimated a 300,000 deficit. That was $1 million. I think this one might have been the biggest one, but I think if we look at the last 5 years, we're always that way.
Well, this.
I thought that when we talked about this last time, and Kevin had brought up that we consistently say that our expenditures are going to be high and the revenues that come in are going to be a little lower. You know, we do it that way so that we don't spend too much and count on too much, right?
Right. I think the one thing I think Tim's asking for, though, is when the board takes action at the second week of September, Scott will have received information from the treasurer's office, at least in July and August, of tax dollars. And some of those may be from the prior year, and that's money sitting on hand. So I think at the minimum, I think what Tim's asking is if we know we got an additional 100,000, let's say it's from 2015, why aren't we adding that 100,000 to the prior year line item in the budget? Is that correct?
That's three things. That's the main one. The second one is I think this information is useful, and the third one is there's 7 of us. Maybe the majority agrees. I don't think it makes sense to always underestimate revenues and overestimate expenditures to show you're coming in better. And if you get, I keep saying it, as the budget gets tighter and there's new board members on here, what if they say, the majority say, we aren't going to approve a deficit, which they could do. Some boards do that. And we've got this practice of estimating a deficit when we don't really think there's going to be a deficit. It's a more comforting to people to know we aren't going to spend a deficit at the beginning of the year than to find out, well, here, we did it this way, but when the year's over, we'll probably come in positive. I personally don't think that's the best way to do it. And I think a big part of it is getting our handle on, you're going to explain certain things. You couldn't expect or anticipated some of the government payments that we got more. You just don't know. You can't estimate them better.
Right.
But this is the 8th budget I work on. I still don't think we understand how the revenues come in on our big item, which is our property taxes. We still don't understand why there's a carryover, how much it is from the prior year into this year, and what will be adjusted, what we won't collect in it. And that's often one of the biggest ticket items on the difference here. But again, I'm just one person. If if the other 6 don't think this is worthwhile, I'm not suggesting we should do it. I just think we're short-selling ourselves and our process of what we're telling the community if we just say, well, let's underestimate expenditures and overestimate revenues and let's see how it plays out at the end of the year. I just personally don't think that's the best way to do it.
I don't think we ever do that intentionally, Tim. I remember when we first came on the board, we did have high refunds. And it was only after a few years when we realized that we weren't giving back tax refunds to the extent we had in the past.
On that one item,
On that one item.
on the refund item.
Right, but I don't think we ever intentionally overestimate expenditures so that we will come in on cue. Most of the time, we are trying to get the numbers, but we can never nail down what we're gonna get for reimbursements for transportation. We can never nail down what we're gonna get for Title, Chapter 1, or whatever they call that. We can never nail down exactly how much we're gonna get back on our tax. If
I
they're gonna
agree with
collect
that.
99. And nobody has a crystal ball to know that.
We could get pretty close to what our
I think we talked
property
about this
tax
last-
collections
we
are.
talked about
But
this last
if we,
September.
so if we take the
And-
approach that we move in last year's revenue to budget, doesn't that encourage the board to spend more?
Why?
Because now all of a sudden you brought 250,000 into the current year, and now you, what happens if we had budgeted, break even, now it's 250 over?
I think
Well, does
all it
anybody in
does,
the
if
board
you're
approve
used to-
expenditures
if you're
because we have
used
more
to
money,
running
spend more?
deficit spending, right? So
Yeah.
We're saying, I mean, last year I sat here, so I'm not comfortable with deficit spending, and everybody said, oh, no, and revenue will come in, it'll be fine. And it did. So, to the point is, we did kind of fake it last year. It's hard to trust it. What is 3% wrong? What was the number?
600,000,
What did you say, 5?
just from taxes.
Right.
But how do we
But I
predict
think
that?
what,
Well,
We knew that
used some
600,000
historical average.
we knew
used
that
some historical
600
data.
we
And
knew that
do-
600,000 before we even approved the budget in
Yes, we
September.
did, most of it.
Because we got those payments. I think,
Well, let me say, before you go that, I personally think it would be bad practice on any board to say, we got more money, we're gonna spend more. And that is not, to my knowledge, how we've done any budget. We make the superintendent, the principal, the administrators go and say, okay, here's what you spent this year. You know, what do we really need to spend it next year? We have the bunch of things we go through. Labor, our biggest thing, we do that in negotiations, you know, think of how we go through the books, or different practices like that. So, you know, we've talked about this both in terms of expenditures for labor and others, that, you know, if the budget gets so tight, or your deficit spending, then yes, now you're constrained, you can't spend the money you have. But the fact that you have a surplus never justifies just spending money. You have to have a reason to spend the money. So I don't think, I personally don't think that should affect whether people are going to approve expenditures. And we're going to do it today. We're going to go through the budget items the way they are, and I'm sure other people have questions. I asked a bunch of questions like, why is this going up, or why is this going down? So that we have some feeling for whether we should be approving the expenditures or not, right, in the proposed budget. And once the budget is approved, we look at it on a monthly basis and ask the same questions. Why are you going over budget on this? We've done that a bunch of times. And, you know, we took it out, we're going to spend less here and we're spending more here, whatever happens. But I just think it gives a false sense of what our real financial is, or whether people
So what
rely on
happens
us.
if, okay, we put it in, and what happens if our collection rate drops to 92%?
Well, what's the likelihood?
Then
of
we're
that
gonna have a
happening?
deficit.
True.
I'm just saying.
That could,
You
if it
never
happens,
know.
we're gonna have a debt.
Right.
Well, we know that.
Then we're gonna say, should, you know, so what are we gonna, we
Why
gonna
would
say?
the collections go to 92%?
Well, I'm just throwing that out
The
there.
state's
It drops
unpredictable.
to 98, drops to 97. We moved the collection rate up now in the budget to 99. So now, what happens if on a 1% variance on that?
200,000.
There you go.
And that's
And you
that
don't know
amount.
unless we ask the Cook County assessor to give us each individual property owners to see who paid their bills, go line by line and see who's got a receivable with the Cook County assessors 10 years, each year back to see, and then we put a probability of collection on those individuals. Do we know that the North Riverside Mall is making payments in? I don't know. I'm just saying that you're not gonna know your revenue unless you go and look at the individual listing of individuals to see who has paid the 2016, 2017, 2018 bills, and who hasn't, and who's gonna go to a tax sale, and who's gonna go to a foreclosure.
Is there a negative of putting any money that comes in July and August in the September budget?
So then you're gonna start that slippery slope to do it every year. And you're gonna be able to manage through that? I don't know.
I'm comfortable keeping the practice as it is, just because of what you're saying, Gary. The state is so unpredictable. And I'm sure this is a conversation that happens across a lot of school districts in Illinois, just given the way Illinois functions.
But we're
So
talking
I'm
about two
comfortable,
different things.
but I'm comfortable
But hold
keeping
on.
it the way we are.
You mixed up apples and oranges when you said that. I'm not disagreeing with the payments from the state.
Right.
We don't know, we gotta go based on what we think it's gonna be. He was talking about property tax payments.
Well, I'm
And then-
comfortable keeping this the way we're doing it because I don't trust the state.
The state has nothing to do with
I know
property
you-
taxes, it's the
County.
county.
The county.
And it's
But-
people, what's the chances, I mean, Gary did that to make an example. It's not gonna go from 98 or 99 to 92. I mean, the chances of that are zero.
So if it goes from 99 and a half to 98, what's the impact on our school district?
$300,000.
Yeah,
Which is the amount of money you're talking about.
We've been fortunate
and we
to
just
not
moved our
have,
budget up to 99.
99%.
Where were we budgeting before?
And we
99?
came
99 and a
above
half.
budget after we moved it up.
but we've been real fortunate to have things stable.
Well,
3 years ago, when houses were being foreclosed on and we could see abandoned house, when we were running for election, Gary said he and Cindy walked the block and could see empty houses on every block. We've been real fortunate in the last few years where money is being collected at this rate. But anything can happen. We've seen it too in our tenure.
well, if people have a problem with looking at the last 5 years, the way I suggested to compare how we budgeted for just the operating revenues and expenses and the surplus or deficit and how it came in an actual.
Don't you have that already in the budget?
I could probably get that pretty
No,
quick.
the summary page on 73, isn't that
Oh, it
kind of?
might be.
It doesn't break down.
It doesn't break down the taxes, but it does
That's what we
show.
were trying to get.
Tim, I'd agree with that proposal. Maybe what we can do is like, we can control the expenditures, we can't control the collections, but somehow, maybe in our budget, when we approve the budget, we have, okay, but we say it's 98%, and plus or minus whatever, 1 or 2%, how's that gonna affect things, right? Then we really can't project a deficit, but we can project a range of deficit or surplus, based on the
So if we get like
past.
97%, that's
Right.
98% that.
So you take the median collection and plus or minus, this is what it's gonna be, so we can't really predict it, but we think it's gonna
It'll
be
within this
balanced
range.
based on this expenditure. Because it is uncertain.
Do you have a problem if he does that for 5 years?
Yeah, it could break out what the basis of it is, but what we can't
It's
do
only-
is predict the future.
No, I
Toys R Us
understand
went
that. But it doesn't
bankrupt.
hurt to
Is that gonna be an
see what
open
it is.
location? Is that one of our tax bases?
If who goes bankrupt?
Tony's moved out. I mean, we got certain major retailers who
Carson's
currently
is
get.
gone.
Carson's is gone. So is that gonna, is that
Sears
tax
is going
base at the
down.
mall gonna shrink significantly? And then,
Well,
I mean,
Sears is gone.
But
I
hold
mean,
on a second.
I'm just trying to raise an issue that we raised our collection rate to 99% this year.
But then if you want to go into whether, just like people foreclosing, in a foreclosure sale, the people buying the property have to pay the property taxes. So you're going to collect them. Aside from student debt, property taxes are the one thing that you're going to collect. It might be delayed. Somebody else owns the mall, right? They lease the space out. The owner of the mall is paying the property tax.
That's why we have but then
Right.
they come through and they petition to the county and say this mall is not worth as much as you've assessed
Right.
it. And that's what goes and it gets caught up and that's why we had that pending refunds going on. I think we got burned with Sears, when Sears moved out, that we had a refund a major amount of money back to them. So I'm just,
We got 2 months.
So we can think about-
To keep the
let's get to-
conversation moving,
yeah.
I think we got 2 months before September. I think Scott can easily break out over the last 5 years what we projected the budget to be and then what it came in on June 30th. That's an easy chart to complete. Hearing from the board, it sounds like it's about a 4-3 split on what practice to use. It seems like the current board, the majorities are saying keep current practice. But let's wait and see what he does on the breakout. Let's see what other adjustments come in, what comes in from the treasurer, and then we can discuss this again next month.
I would also like to recommend that before Scott brings it to the board, that maybe the financial
Council.
advisory committee have this discussion too, to see if there's something that
fine.
might be missing.
I usually send them stuff when Scott gets those, so I will take care of that.
So maybe you have that conversation ahead of time.
So Scott, you raised an issue with the testing. What do you mean now that that's going to be used? I don't understand what you were saying when you said that.
Oh, and
And the activity one.
the activity one? Yes, for the different exams, the AP exams, the PSAT, and the National Merit, and the ACT prep, all the test costs for those go out of activity, but also all the revenue goes in for that. If you look at some of the different years, for example, in 17-18, we had rental supplies to get our tables and chairs. In the previous years, it was not billed. It was billed to a board account. And after looking at it and getting everything in order, anything that comes in for those particular tests and the fees coming into the activity, all the expenditures will come out of that activity account. Whereas in previous years, if you notice, the rental,
So it kind
some
of,
proctor's expenses.
So it
whatever.
validates my rationale to not have it as a separate activity account, but to move it into the board accounts. That way, you don't forget that things don't slip through the crack, and we know the revenue was put into, we know the expenditures got expended through.
But the problem with doing
There's quite a
a
few.
board account,
refunds.
there's a significant amount of refunds that are issued. And so to issue credits back from a board account is kind of an accounting nightmare.
I would-
Individual students that don't take an AP exam get the money credited back.
Because what I'm saying is, aren't we going to collect fees this year for testing?
Well, yes, but
So then,
after,
so you're going to use 60 plus?
No, but I
plus
think
it'll
what
be
he's-
spent down in years.
I think
Plus
what-
the amount of revenue we're going to get this coming year.
So
Go
there,
ahead, Chris.
so there are a few other points. $20,000 of the balance also comes from the Arthur Foundation. We received a grant over 10 years ago, and that's particularly used to get students to be college ready. I don't have the information as to exactly how we obtained that grant or where it came from. And so that is earmarked for that. So the account is not, the balance isn't as high. And then other things to keep in mind, the PSAT/NMSQT is a national merit test. So that, for example, is something that students sign up for in October. And then we pay all the costs out of there. So that's optional for sophomores and juniors. So we can't really budget for that. We have no idea of which students are going to take that and which students are not. Also, if you look at AP, we charge student fees for that, but this year we were a negative balance, and that is really like the difference between some of the years too, as we had recently raised their fees. But that is incredibly difficult to budget for because you don't know how many proctors are needed. That's based off of how many accommodations we have and things of that nature. And with the testing going on for 2 weeks, that's difficult. We wouldn't be able to project that right now in the summer. So those are, and then the ACT prep is something that we do after school or before school, and students that attend all of their sessions also get a refund as an incentive for them to coming to all of those sessions. So students get a refund for that activity as well. So there's a considerable amount between that activity and the AP exam and kids that choose not to take that of refunds too that we issue out of this account.
Maybe you can help us on two things you said. The payments, the credits you give out of this, they go through the impressed account then, right?
No, they go through the activity.
So there's a whole nother set of checks that you write that we don't see. That's what you're saying, right?
That is correct.
Okay, and do we, somewhere in the budget, on a total basis even show the activity in this?
You don't see the individual
Do we see the
detail,
total?
you just see the ins and outs on a monthly basis.
For the total, for the
Yes.
whole? Like
For that account.
Yeah, so if like the football and the cheerleaders paid something out or took something in, they would be part of the, they'd go on to a total for this activity account that does go in. And that does hit the budget then, right?
No.
No, it's out of strictly activity.
So it's just showing, this report's all we get on the activity?
Yes.
That's it. The in and out monthly.
So if you wanted to accommodate both, which is a need to do an easier way of managing this, and have the board having control, which they have the fiduciary duty for that, could you put a line item in the budget for what we expect to take in and take out on that account? For the whole thing, the whole activity, not on a line basis, but on the whole thing. Kind of like you do with Aramark?
I think they just told us they don't know how much is gonna come out, depending on refunds.
So when we're charging an AP fee, that goes into this account,
Yes.
and we don't budget any of that in our,
No.
Nope, nothing's in the board budget.
And
Because
so if you
typically,
think-
majority of that AP fee is paid directly to the college board eventually.
If you look, we have $60,000 left over after this school year. We were -10 over already. So once you start taking out, if you take that Arthur Foundation grant, which is $20,000, which is gonna pay the CAP coordinator, really we have a balance of 40. So if we start paying all the proctors, the tables, and the rentals,
It's gonna be
that
spent
surplus
down.
is gonna be should be spent down rather quickly in the next 2 to 3 years. It should be running.
so right now, historically, the board accounts have been paying for the proctors, and even though we were putting the fees into this account.
Correct. That's why you see a surplus of 17,000 in 15-16, and then
Yeah,
5,000
very-
in 16-17.
And I think what happened was with the transition between Tim and Scott, some of what got charged to the board and what got charged to the activity account got a little lost in translation. So we put together a spreadsheet that specifically outlines what costs come out of the activity account, which is why you see, a deficit of a negative $10,000 that was spent this year in terms of the net expenses.
Well, let me ask a different question then. Is there a way to, this report's always a mess anyway, because instead of dropping an Excel and getting the numbers right, you have to tell us to do negatives when they're positive or negative. But is there a way of listing which of these accounts are actually expenditures for school activities versus like the clubs? So we'd at least know that.
Yeah, we can work on something.
Because I mean, if, again,
So-
if it's the ecology club who has a $2,500 balance, they're doing fundraisers or whatever, and they're buying T-shirts or whatever they are, I don't think, except that we have to make sure they follow the rules that you're doing for us, we need to know about that, but
I mean, the
to be
majority
honest,
of
on the
these-
other stuff, we keep finding out about these other little tricks that we have of, well, we have this fund that we put here, and we spend money on this and here, and
I mean, the biggest thing is we shifted all the fees from activity to the board account.
No, you did
for the
you did a
student
major
fees.
cleanup last year, and I
That
appreciate
was-
the fact that you moved a lot of, that were in the activity accounts before into
To
the
the
board
board.
accounts. And I appreciate that.
And-
And I just thought this would be another one. Can you go back and say, okay, 2017, I didn't charge this testing account for tables and for proxies. This account owes the board $13,000.
I mean, you can do that.
We'd have to figure out which account was
What
missing.
account?
I know you could do that, I'm saying,
It's
could
just a
you
matter
fiscally
of
go
going
back?
back and then
So what you're saying, if in order for this to go
Reimbursement.
down,
I think the
in
easiest
order
one-
for this to go down to 40,000, what you're saying now is that we're running testing at a loss. On the upcoming year, we're going to be running this at a loss.
Well, right off the bat, we
Most
got it.
likely.
We have to start charging the CAP coordinator to this account. For the last 2 years, we charged the CAP coordinator to the general stipend account. So that right there was $6,000 each year. So that's $12,000. So I mean, we don't know how many table rentals we'll need or practice.
No, I understand that. That's, you know, you can approximate, right? But you can look at historical trends and say, okay, historically we have X number of sophomores taking the test, we have X number, we have a pattern that we get roughly X percent asking for refunds and approximating things. I understand that. All right, I'm beating it long enough.
Scott, do you have any other questions on your CFO report?
No.